Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, mortgage protection, annuities, disability, business continuation, or final expense life insurance, we've got you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing life insurance riders, 9 things you need to know. Let's start off. Number one, what is a rider? It's like insurance talk. And if you're not in the insurance business, you don't know what a rider is more than likely. Think about the old days when you had cowboys and Indians riding horses, right? So the cowboys or the Indians were riding on the horse. They weren't the horse. They just sat on top of the horse. So think of the kind of the same light with riders on an insurance policy. The insurance policy is the horse. It's the mechanism that causes things to work, and the riders just kind of sit on top. So a rider is an optional provision that can be added to many different types of life insurance policies and expand the benefits beyond the basic coverage. Now, just keep in mind, some policies come with built-in riders, and some policies you can add riders. So that leads us to our number 2 point is that riders can be customized. Life insurance riders can be customized, and they allow you to tailor the life insurance policy to meet your unique requirements or financial goals. Point number 3 is additional coverage. Riders offer additional benefits beyond the basic death benefit, and they can cover such things like a critical illness or a disability or long-term care, or if you get injured and can't work, your payments can be made, things like that. Point number 4 is you may need to pay more for some of these. As I mentioned earlier, some insurance companies and insurance policies include basic riders with the original policy. And then some of them offer additional riders that you can add on top of that, often at times at a minimal expense. A fairly common one is like an accidental death rider. Now, the life insurance policy is going to pay out whether you die of an accident, a car accident, or of cancer, either one. So if you had $1 million policy and you died of cancer, it would pay $1 million. If you had $1 million policy and you died in a car wreck, it would pay out either way. But some of these policies, you can add an accidental death benefit rider and it would double it. So if you died of cancer, the policy would pay out 1 million, but if you died in a car accident, it would pay out 2 million. Now, a lot of people would say, well, why would I do that? I mean, the chances of me dying are fairly remote, at least from an accident. Why would I ever do that? And what we always tell people is it's like, if you're going to die from cancer, it's not like one day you get cancer and the next day you're dead, right? It takes months and sometimes years and years. So there's time to plan and get your financial things in order. When you die in a car accident, it's like you left for work that day and you never came home, and it's traumatic. And you may not make the best decisions in any number of situations. One of them would be financially. So, if you can get more money, it just creates more buffer. And I always tell people financial buffer, that is anyway. And I always tell people, you know, when you look at an accidental death benefit rider, it's like it's helping make the best of a bad situation. And it just provides, and again, it's out of the blue. There's no planning. You're going to need more money to take care of things. So an accidental death benefit rider is just one example of one that can really benefit people. Now, you can choose which riders to add. We're on point number 5 here. So you can include like an accelerated death benefit rider. A lot of the policies have these things. We're going to go over that in a minute. Accidental death benefit, waiver premium. I'm going to talk about these. These are other points. But you can choose in many cases what to add. And then some insurance companies, they just include some of these things, which is really cool. It means you don't have to pay extra for them. Point number 6 is some policies can be converted. So Riders provide the option to convert term life insurance into permanent whole life insurance without undergoing additional underwriting or providing evidence or proof of insurability. This is really nice because, you know, if you're 40 years old and you get a 20-year term life insurance policies, you're going to be 60 years old when that policy matures, and then it's going to go away, and you will no longer have insurance. Well, think about this. When do most people start seeing kind of health problems start popping up? It's kind of in their 50s and 60s, right? Yeah. So the challenge is you've got a 20-year policy. Now you get to age 50 or 10 years into the policy, and you have some health issues, and you still have some pretty significant financial obligations that aren't covered or you can't pay for. So you want to get life insurance to do that. Now that gets more challenging just because of your health. Well, if there is a rider on there that allows you to convert a portion of your policy over to whole life, you can do that automatically, and they don't even ask any health questions. Your health is treated as if the day you applied for the plan in the first place, when you were in terrific health. So let's say you had a $5 million life insurance policy, and you were diagnosed with something, and boy, you just said, hey, I don't want to run out of coverage. So you could potentially, depending on the company and the policy, you could potentially say, hey, I want to convert 1 million of that over to whole life insurance and leave the other $4 million as term life insurance. It depends on the policy and the company, of course. But you could do that, and you could get that whole life policy that would last all the way until age 121 years old. You'd have to pay a little bit more for it because it is permanent coverage. But the key here is you don't have to produce evidence of insurability. So no matter how bad your health, you could get approved for that whole life plan. Pretty cool. Number 7 is, let's get into the riders here. The accelerated death benefit rider. A lot of companies offer this just built into the policy. And one of the challenges, if you don't get the appropriate life insurance, is that you gotta die. You gotta wait until you die for your family members or loved ones or anybody or your business or anybody to get that life insurance death benefit. And it's tough, right? That can be really tough because maybe you need the money beforehand, and maybe you're sick. Maybe you need some of that money for medical bills. Say you've got a $500,000 policy, and you're trying to get treated and trying to survive, but you've racked up $100,000 worth of medical bills, and you don't have that money. So what an accelerated death benefit rider does, it allows you to receive a portion, or in some cases, the entire death benefit if you're diagnosed with a terminal illness or specified critical illnesses. And it can be used to cover anything: medical expenses, financial obligations. If you wanted to take that one final dream trip before you passed away so that you'd have those final memories and your family would have those final memories, you can do that too. So if you had let's talk about a final expense policy. If you had a $25,000 final expense policy and you were diagnosed with cancer and they said you got 7 months to live, you could get the entire $25,000 out of the policy. They would pay it off just with the doctor's note saying you've got 7 months to live. And a lot of people would say, well, why would I want to get all that money out in advance? Well, you know, once you got the diagnosis, it would suck, right? It would be terrible to, for the first few months coming to terms with your mortality and you no longer be here. But most people would, after that point, would want to make sure that their family didn't have to suffer any more than they're already going to with your loss. So they would say, hey, I want to take care of as much of this as I can beforehand. So if you get that $25,000 out beforehand, you can go down to the funeral home, and this is not morbid. This is a gift of love doing this for your family. You could go down and plan your own funeral. That's not morbid. That's love. And you can take care of that so that your family doesn't have to. And then when you do pass away, they can just focus on your life and your love and your legacy and not have to deal with any of the other mm, funeral home things or anything like that. Really, really cool. And then the math is the same whether it's a $25,000 policy, a $500,000 or $1 million policy. It just depends how much you can accelerate. Some companies might be 25%, some might be 50%, some might be 100%. So it definitely is to your benefit to look for a company that has a higher accelerated death benefit rider percentage. Our number 8 point is the accidental death benefit rider. We've kind of talked about that a little bit. Comes in a couple of different forms. In many cases, it would be, hey, say you've got a $500,000 policy, and the insurance company will allow you to add an accidental death benefit rider that if you died of an accident, it would double the face amount. So it would pay out $1 million. And we've kind of already chatted about this a little bit, but yeah, it's pretty cool. Now you'll pay a little bit for that, but here's the thing. The accidental death benefit riders, they're really affordable. Because the chances of you dying in an accident, to be honest, are fairly remote. But hey, if you watch the news every day, it happens to some poor sap every single day, right? Just trying to get around town, buying groceries, going to work, and they head out in the car, and neither they nor the car ever gets back. So it's legitimate and it's really affordable. And that's why people really like adding this on, because it's really just making the best of a bad situation when something happens, just immediately. And one day they're here and the next minute they're not. That's tough for families. So really great benefit, and it's very, very affordable. And then the other is the waiver of premium rider. And not all policies have this, not all companies offer this. But what would happen is if you became disabled and are unable to work due to an injury or illness, this rider waives future premium payments, ensuring that the life insurance company or the life insurance coverage remains in force. And I helped a couple once, and I was helping the male, and his wife had a policy, and it was like a $3 million policy, and they were making payment on it. And she rode horses, and she fell off the horse, and she became disabled, and she could no longer work. They were able to turn on that waiver premium rider, and they never had to pay another premium for that $3 million policy. Really, really spectacular, because she couldn't work anymore, and therefore the premiums would have been probably less affordable. They may not have been able to do it. So she paid extra for that when she got the policy. But man, I tell you what, they were so thankful to have that. So there you go. Life insurance riders, 9 things you need to know. My name is Randy Vandervate, and I hope this podcast has been helpful to you. Funeral Funds of America can help you qualify for first day coverage or benefits at funeralfunds.com. That's funeral, FUNDS.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.